Hello, and welcome to Real Estate Investing Deal Deep Dive. I'm your host, Jeremy. The Deal Deep Dive offers lessons learned from Canadian investors while scaling their portfolios. If you're looking to scale your investments, listen to stories from those who have already been there and what they did in your shoes. Manjit, welcome to the show.
Yeah, thanks for having me.
Now, I see you all over social media, educating students, helping people learn how they should be investing in real estate. For those who haven't seen you yet, who are you and what do you do?
Yeah, thank you. Thanks, Jeremy, for having me here. So yeah, I'm a full-time investor in Winnipeg, Manitoba, and I've been investing for probably about 15 years now, about 8 years full-time. So I had a job there for a little bit as a correction officer. So that's my background, and started getting a little bit serious at the end of my correctional officer career. And then, yeah, about 8 years ago, I took the dive to go full.
Okay. What made you make that switch?
You know what? I was just in a very toxic environment. If anybody works in law enforcement or corrections, policing, probations, it can be very, yeah, it can be a very toxic environment. And at that time, I was mainly focusing on flipping, and I just saw it as a way out. I just saw it as, you know what, if I keep doing this, keep making profits, that I can eventually leave this career and just pursue real estate, which was what I was already doing on a part-time basis.
Sounds fair.
Yeah.
So you started flipping. What are you currently doing now?
So mainly we do buy and holds now. So we do smaller multifamily. We either find burrs and some older older properties and renovate them, refi them, and then hold them with the joint venture partners. And sometimes we'll hold them on our own, but majority of them are with the JV partners. Or we'll get a builder and they'll build for us, and we'll hold it that way as well with the JV model route.
Okay. So you're doing new builds as well.
Yeah, that's right. Yeah. Yeah.
That's
So not
fascinating.
many, but we started getting into it. But majority of our stuff has been pre-existing, like 1950s and 1950s or earlier, that we can basically refi, pull out the investor cash. And so basically, if we're buying it with a private lender, we pay the lender off, and then we're just the only ones on property. But depending on the deal and how much the bank will personally lend us, we will buy majority of them with a JV partner.
Okay. Out of curiosity, why are you buying 50s and older?
Just we've had a lot of 100-year-old buildings, right? Turn of the century in the 1900s, and like it's 2023 already. So these properties, a lot of them that were built in like 1906, 1910, which we had quite a bit of, they were just causing a lot of problems. A lot of the cash flow would be negative and a lot of maintenance issues. So we decided to just get rid of them.
That's fair. That's fair. What kind of complications do you see in buildings that old? Foundation or
Yeah, foundation, it can be, after that long, right? If usually you have stacks and you have galvanized, plumbing, and so that can cause issues. Yeah, all sorts. I mean, like, just wear and tear over the years, right? So, but I mean, the stuff like furnace, windows, stuff like that, that's normal upkeep. But I just find like there can be foundation issues, especially if it's you bought like a limestone foundation, which a lot of our properties were at that time.
okay.
Wasn't concrete.
I haven't seen many limestone foundations.
Yeah.
Is that
Yeah, where
something?
out where we are, depending on the area, yeah, there's a lot of older houses like that.
Okay. Do you see any like wooden foundations or cinder block or
We do, yeah, we do. We didn't have a lot of those, but though, of course they are around.
fair enough. That's what we
Yeah.
see lots in Edmonton where I am, is lots of cinder block and wooden foundations. So very
Okay.
interesting to hear you have limestone.
Yeah, no, definitely. So no, that's good. Well, I'm glad we sold it off and started with a clean slate a couple of years ago.
Sounds fair. So what markets are you currently investing in?
We're just primarily here in our backyard.
Okay, just Winnipeg.
Yeah.
Okay. So we'll hop into our first segment here. What was the best deal you've ever done? What was the plan and what went right or wrong?
The best deal I ever done. And what do you mean by that? As in terms of profit?
It could be profit or simply the least amount of headaches or something that went extremely well that you weren't expecting.
Yeah, so we did a deal maybe a few years back that came from one of our private marketing campaigns. So the seller called us, and upon first look at it, we thought we could potentially flip it and flip it to a seller or flip it on the market. But then when I started actually driving there, I noticed that this property, and I looked at the city assessment, it was on a 50-foot lot. So that basically where we live, that's basically like a double lot. And so I saw that the potential was actually in the land, not the property. And at that time, we weren't doing any builds. But what I ended up doing was, after I ran the numbers from our realtor, we figured out that, there was probably about 70 to 80 grand profit to be made here if we just bought the property and then just sold it to a builder. So we actually ended up doing that. We bought it, sold it to a builder who paid us about $82,000 more in a matter of a couple of weeks. And they ended up going and demolishing the house, subdividing and building 2 brand new properties. And honestly, that was probably one of our fastest and most profitable deals we've done.
Yeah, that's fantastic. Okay.
Yeah.
How
So
is that what you're currently doing? Finding properties like that?
no,
Or
no, this is just, we do a lot of marketing. So whatever comes our way. At that time, this was a couple of years ago, so we weren't, if it was now, we would have actually just built that ourselves and got a builder to build something on there. But at that time, that's what we were doing. We were renovating, we were holding, but we weren't doing any land deals.
fair enough. Okay. That does sound like quite the deal here, though.
Yeah. Yeah, no, for sure.
Okay. So looking back on this deal, is there anything that you would do differently?
Do differently? Not Not that I can think of, no. I think everything that could have gone smoothly, it went smooth. One thing that I did notice, like not notice, but really that was imperative, was that how important it is to have a good lawyer, right? To have a good lawyer on your team that can really push the deal through, that they can work with the other lawyer. So in our case, it was the seller and it was the end buyer that we ended up selling to. Right. So there were some hiccups, small hiccups along the way, because we wanted a big deposit. They didn't want to give a big deposit. And so having a good lawyer was just making sure that transaction goes smoothly and it closes all the way through, because, you can have lawyers kill deals. And I've seen that in the market where, they're maybe not on top of their game, or they don't have a good system in place. They don't have a good, maybe, assistant. And so things fall through the cracks. Or, I mean, they're just not persistent with getting the information we need from the other side. And again, the deal falls through, right? The deal breaks. So I've seen that happen too. So I think that was really important that we did have a good lawyer on there.
How do you find a good lawyer?
How do you find? Well, we've been pretty lucky to be working with a couple of good ones. We've only worked with like 3 over the last 15 years. I think if you're new, really just one place we would start is obviously look in your own market. Right? Who are other investors, who are other peers of yours that you've met at events or networking events or social media, and really starting there. People that, getting a referral from people that they've already worked with, and asking them like, hey, who do you know, or who do you work with currently that you enjoy, that knows real estate law? I think that would be the lowest hanging fruit to start, because that way you're at least getting an introduction. You're not going totally blind and trying to find somebody on Kijiji or on Facebook, or on the web somewhere.
Yeah, that's how you get burned very
Yeah,
quickly.
definitely.
Sounds fair. How did you find this builder after you had the property locked up?
So the builder, actually, it was very lucky, because when we got there and we saw the property, we noticed that the builder, they were building actually 3 or 4 properties on the same street. So when we were taking off, like after we wrote the contract up and we were taking off, we actually just called the realtors that had this builder's listings. So they were selling their 2 properties already. So we called the realtor up, and we happened to know the realtor, and we said, hey, you know what, would notice that your client has a couple of new builds here. Would they be interested in a potential 50-foot? And I already knew the answer would be yes. And they called them and they said, yeah, what do you want for it? And we sold it at market value, and they took it, which was great. So it was pretty easy. I mean, that if we didn't have that there, then of course I would have gone to our builder database, see what builders we are. And this is so important, because if you're in real estate, whether you're investing or you're wholesaling, you just want to have a list of potential investors that you have met throughout the years, right? In an email, maybe in an email list or a CRM, because when you do have a deal and you want to find a buyer for it, or you want to sell it, or whatever the case is, you can at least shoot out an email and get somebody to act on that really quickly. And for us, because we had been in the business so long, we we probably had close to 300 investors and builders and realtors who also invest that we can always go to and try to move a product or find a deal if we're looking for a deal. So that would have been our backup option. But for this, again, he was building already on the street.
Makes things nice and easy. You mentioned a CRM and a database. What, just for the listeners, what are those?
So a CRM is like a customer relationship management system. It's something that, it really organizes your business. It organizes your leads, your lead flow, your investors. And instead of having, notes on your phone or on like a notepad or whatever, everything's organized in a CRM, and you can use a tool. And there's, I think there's Salesforce, there's HubSpot, there's Pipedrive. So, and again, there's lots on the market. So that we use Pipedrive, and we've been using it for years, and it works well, because when, we do have a deal, we want to make sure that it's moving forward, and we can track it at any stage in the pipeline of our progression. So again, it just helps us keep organized, and we have our entire business on there.
Okay. How would you suggest people go out and actually build up this database?
I think for us, really, it was just in the beginning, it was networking meetings, right? Like networking events, real estate seminars, and where you're just, right, you're meeting people, you're exchanging numbers, your emails, and you're keeping in contact with them. And then, you're putting them in your CRM, you're putting them on an email list. We use ActiveCampaign. So that's our email list builder, where we basically, again, we accumulate emails that we've sent out, and then we usually keep in contact with them with a newsletter or updates on our business. So that sort of thing. But for the most part, that's where I would start. I mean, there's a lot of ways. You can find advertisements of investors on Kijiji, on Facebook, in social media groups. So there's real estate investor leads and contacts everywhere.
Sounds fair. Is there a social media group you prefer to hang around with?
To hang out with? Not really. I mean, we run our own group there's about 5,000 investors in there now, called Other People's Money, raising capital through private lenders and joint venture partners. And we can give you a link to the group there for your listeners if they want to join. But yeah, I mean, that's one group there. I mean, there's tons on Facebook.
It sounds fair. So is there anything that you felt that you learned from this best deal that you've done?
I would probably say just a couple things. I didn't learn, but I really appreciated what experience can do for you. Like having experience in real estate, having experience with building connections, having experience with learning how to talk to sellers, right? Learning how to negotiate, learning how to write an offer to purchase without a realtor. So these skills, if I didn't learn those skills in the previous years, it would have been very hard to actually close that deal. Right. So really just appreciating that, and not really of anything I did, but just over time, right? Over time. And again, this is why in business or in real estate, it's really a long-term game. So the more you're in it, the more, again, failures you have, or even successes, but really more failures, you just get better and better at your skills. So I think that was one huge thing that moved this deal forward. And then just my network, right? Again, having a good lawyer, have potential for this deal, potential builders that could possibly buy the property from us, right? So all of these things came into play.
Very cool, very cool. How big is your network currently, do you think, on your CRM?
My network of real estate investors?
Yeah.
I'd say maybe about 300-400.
Okay.
300-400, like locally. And then I have investors across Canada, of course, but mainly it's where we live.
Sounds fair. Just so we can give the listeners a ballpark to what to shoot for in the future.
Yeah, for sure.
Sounds fair. So we'll switch gears here a little bit. What was the worst deal you've ever done? What was the plan, and what went right or wrong?
Good question. Worst deal we probably did was a house flip. Again, maybe 3 or 4 years ago, where we ended up buying this property, and we ended up paying too much for the property because the comparables at the time were a lot higher than they were a lot lower than what we thought. Again, I got these comparables, and we didn't have a lot of projects going on at that time. So we actually moved a little bit hasteful. We ended up buying the property, and again, right from the get-go, right? We bought it too high. The comparables were too low. There was a condominium in the back, which was a huge factor from people buying it. They didn't want a condo in the backyard. And so we didn't think it was a big deal. So there was just a lot of judgment It was just like a lot of things that we thought, I guess, errors in judgment. So where it caused the deal to go wrong, and just sitting on the market too long, right? We were paying about a 12% return to our investor. And because this property was it was in a good area, we obviously borrowed more because it was in a good area. And I mean the interest, the interest payments every single month, like or it was just draining our account, and that was probably the worst deal we've ever done.
It sounds
Right.
fair.
But in that deal, we learned a lot. We learned a ton on how not to buy a deal, right? So, but you know what? I've taken those lessons from that deal, and I've applied it to other ones throughout the years.
How long was that property sitting on the market for?
I think it was good, maybe 4 or 5 months.
Mm.
Yeah,
Mm.
so 4 or 5 months. I think the investor made the most money in that deal. Yeah. Thankfully, we gave them their money back.
This is good. This
Yeah,
is
that is
good.
always good. Always got to pay the investor.
100%. So, do you mind just breaking down the numbers here for us? How much if you remember them, do you remember how much you
Yeah,
paid for it?
you know what? It's vaguely because it was a while ago, but I know at the end of the day, like we bought it for maybe, and again, I'm just guessing here, but I think it was around 300,000. We put in about $40,000 of renovations, and I think we ended up selling it at like 350 or 355 after paying a 4% commission. And all in all, at the end of the day, Jeremy, I think we were in the hole for about 50 grand.
Ouch.
Yeah.
Okay. That
Yeah,
hurts.
so it was a blessing to just get out of the deal, right? It was, and for your viewers, and I know there's a lot of that going on right now because the market has shifted so much where people bought a property at the beginning of 2022 and everything was good, or even in the mid 2022, and now the market changed in the last 6 months, or the interest rates changed, and then they took out a bunch of buyers out, and the values dropped, and people who had 5 or 6 flips on the go, I mean, some of them, they're not in the business anymore.
That's very unfortunate. Are
Yeah.
are you seeing lots of that over in Winnipeg?
Some, not a lot, but yeah, we've heard of stuff like that happening for sure.
Okay. I want to touch on the interest rate thing here in just a moment here. What are you currently seeing in the market in Winnipeg? I know that we're recording this in early 23, so
Mhm.
are
Well,
you
I mean, it's I'd say with the five big banks, it's pretty average, right? It's a national average. Property right now, again, this is in March 2023, and it historically spring market is always hotter. It starts picking up, people want to sell and people want to start looking for properties. The snow's melting. So I do feel like the property values, I think they're slowly going to start going up as maybe the interest rates go down. And again, it's all speculative at this point. But I think a lot of the buyers are going to enter the market again. And I think there probably will be a bit of bidding wars because I don't think there's enough on the market right now, especially where we are. And I do see that trend a little bit in other places of Canada. And I mean, you would know more in Edmonton.
yeah, here I think the last three properties I looked at, which are all this week, have gone for over, I think it was 10, minimum was 10 bids on a property in a first day.
Yeah.
So it's
There
getting,
you go. And it's already taking place.
yeah. I know Calgary is seeing it. I think it's below 3% vacancy, which is absolutely absurd. And they're seeing again multiple offers. I'm hoping they're not as many as we're seeing here in Edmonton, but things are
Yeah.
moving quite quickly. So okay. So with you're doing the burst strategy mostly. How have the interest rate changes affected you?
It definitely has a little bit because when we bought some of these properties, on them you're not able to lock in, you're not locking in your rate or anything. So I think from the deals that we had maybe 3 or 4 months ago, that was a 4 month hold or it was a 4 month rental. We didn't factor in that it would jump up, right? Like from say 2.5 to 3, then 4, then 5.5%. So yeah, we're definitely feeling it on the cash flow side, especially the properties that we're closing on. It's gotten a lot slower. And even the properties that we're analyzing right now, it's really hard to run the numbers, especially if you're trying to find a deal, right? You're trying to find a deal flow wise. Again, I mean, in other markets of Canada like BC or Ontario, I can't even imagine. Like it's really hard to find a deal right now. But again, you don't want to be timing the market either. I think it's just having that perspective of like, yeah, interest rates could be 2.5, they could be 5.5, but the business is about long term, right? It's about investing in the market. It's not timing the market, it's time in the market that's really going to make you money. So whether it's 2.5% or 5.5%, which is still relatively low as what people were paying in like the late 80s and 90s, right? 15%, 16%. I think you need to have reserves if you're buying a property, especially with yourself or a partner. You need to have a reserve in there, not just for like a rainy day fund, but to cover those maybe negative cash flow months, right? Where your property is maybe not breaking, or it's breaking even, but if you need some overages, you have it there. I think you even in this interest rate environment, I think you still need to find a good deal, because that's where you're controlling the purchase, right? You make money on the buy. So if you can buy it under 50, 60K under market value, turnkey, or even more if it's a true burr, that's where you're going to make the money, right? Yes, cash flow, that's great, but I mean, appreciation, mortgage pay down, that's really where you're going to be making a return on your investment.
Before the interest rate hikes, what kind of cash flow were you aiming for on your BRRRR?
So we don't have a number per se, but I mean, I try per unit. Again, single families are different from duplexes, triplexes, but we try to average around like, 250 to 350 per unit
That's fair.
of
What
positive cash flow.
what are you currently seeing right now with the interest rate hike changes?
We're seeing almost, so I'll give you an example. I looked at a triplex the other day. It is turnkey, and that's not our model. You don't want to be buying turnkey, but we're trying to negotiate with the seller right now. They're asking 389, it's almost 400 grand. And, we're using about 5.2 on this deal. And I mean, at the end of the day, based on the rents that it's getting, I think it's $150 in the positive, like for all the units, right? So again, low cap rate, low return on your investment. I forgot what it was, 7%. So it's nothing attractive. So definitely it's hurting. I mean, if that was in a norm, again, I don't know what normal is, but if it was like 2.5, 2.5, like, yeah, you'd be seeing a lot stronger cash flow on that deal.
That's fair. That's fair. Okay. Just because you brought up cap rates in Winnipeg, what are you currently seeing for cap rates on multifamily?
Again, it depends on the area, right? So depending on what area you're in, and I mean, obviously C and B neighborhoods, like kind of rougher neighborhoods, yeah, you'll see like a 8% cap rate. And I mean, if you're in an A plus neighborhood, right, good tenants, yeah, like 4, I'd say 4 or 5, somewhere around that, right? Like low, like again, you're paying for the dirt, right? You're paying for the area in those areas. But if you can try to shoot for like a B neighborhood with a 8 or 9% cap with a bump in future equity and rent increase, that's what you want to go for.
Okay, that's very interesting. Just for the listeners who aren't super familiar with Winnipeg, is there kind of like different neighborhoods that you would say are closer to A or B type neighborhoods?
A or B? Oh yeah, for sure. I mean, definitely. Yeah. It depends where you are. A and B. Yeah, I mean, there's like 800,000 people here, so there's quite a few of those neighborhoods, right? So it really depends on your price range and affordability and what you're really after, right? Those A neighborhoods, they are going to appreciate stronger, right, than a C or B neighborhood, but your cash flow is going to be a lot lower, right? Your return on your investment is going to be a lot lower, in my opinion, because you're paying premium.
That's fair. Do you mind just sharing some of those neighborhoods that you do like investing in?
Yeah, so we try, again, we have properties all over the city, but what we're trying to do is try to keep everything close. But we live in a neighborhood close to a neighborhood called Transcona, which is the east side of Winnipeg. So we try to keep properties in this area, but B type of neighborhoods, North Kildonan, C type of neighborhoods, West Kildonan, and then you obviously have your core. But the certain parts like the south end of Winnipeg, that's more of your A neighborhoods, or your southwest of Winnipeg, like River Heights or Charleswood or Tuxedo. These are more of your A type neighborhoods and that's more, I would say more west part of the city.
Okay, that's good to know. Thank you very much.
Yeah, you bet.
So looking at this worst deal that you did do, how did you recover from it? Did you just take all the losses?
Yeah, I covered the losses from our corp. So thankfully we had the money in the bank in our corporation. And yeah, I mean, we just kept doing deals. We kept buying deals. We kept buying, obviously we bought good deals going forward. We bought more good properties than bad ones. And yeah, we recovered, right? We got out of it, and then we just kept continuing to buy. So I think for us, it's because we had done deals before this one that we had money in the account. right? We weren't just starting off with this one bad deal. I mean, it's unfortunate some people do buy that one bad deal as their first one, and then they're out of the game, right? So, but fortunately for us, we had a track record, we had money, and then we just knew sometimes you do buy a bad deal, and right, you buy a bad deal, but you got to again keep that long-term perspective. And we kept doing real estate. We bought properties going forward. I mean, this was like 4 years ago, right? So we recovered that, and then we kept investing, and that's what happens. And yeah, we've bought a couple bad deals here and there, but majority of them have been profitable. And again, it's you want to keep your eye on that, right? Like doing, yeah, not so much numbers, but making sure you're consistently purchasing, and that you also have reserve funds. You have money in the bank to cover things like if this happens or if the market changes. I think people just sometimes will buy too much at the wrong time, and that's all the money they have. It's in real, and then their account gets wiped out, and they have to go look for a job or something.
Yeah, that does make it pretty tough.
Yeah.
Is there a rule of thumb that you have for reserve funds? How much you should be keeping on hand for whether rainy day or negative cash flows, as you've mentioned?
I guess I could talk in terms of like rentals. So when we buy a rental, either with a partner, I don't have a percentage, but we like to have at least like 5 to 8 grand as a reserve fund from day one on closing. So when if there is a vacancy, or if there is we maybe we overlooked the furnace, and the furnace crapped out on like 2 weeks after closing, at least we have money there. And so what I do is, when I'm buying a property with a partner, I make sure in our JV agreement that they know that part of their principal that they're putting in, on top of down payment and the closing costs, they have to cover the reserve fund.
That's
So
fair.
then when we do refi, that's part of the initial funds that they get back. So again, just being intentional about it, letting your partner know, or even if you're buying it by yourself, making sure you do have a reserve fund, and your reserve fund is not your line of credit or credit cards like most investors have.
That's one easy way to get into trouble. So
Yeah, for sure.
for sure. So what kind of lessons do you feel that you've learned from this deal?
Lessons, I would say not to rush a deal, right? Like take your time running the numbers, take your time looking at the comparables, and don't put pressure on yourself to get the deal done, because you just want something to work on, right? You need something to work on. And that was our mistake at that time. We had sold a couple of properties. We were already full-time investors. We didn't have anything else going on. And just again, so we tried to make the numbers work on this. Again, another lesson, don't do that. Don't try to make the numbers work. That was a huge lesson. And the other thing is really, you have to buy correctly, right? Whether it's 60, 70 cents on the dollar, you have to make sure that you're buying properties under market value, especially if you're flipping them, right? Because that's the whole business, is making a profit. So the lower you can buy them, the more money you're going to make. So if the numbers are a little bit tight, and you're trying to like fudge things, like, oh, I'm going to make the renovations work, or I'll try to get materials myself, or this or that, you're forcing the deal, and that's already a bad sign, that you're trying to force the deal, and you don't want to do that. You want the numbers to work for themselves. The numbers speak for themselves. Don't get emotionally.
That is absolutely wonderful advice. I cannot echo that enough. That's how everyone gets injured, and me physically getting injured from not listening to that advice. So thank you, sir. So what advice would you give to investors in your area who are looking to scale their business?
Investors in my area, I guess it really depends what they're trying to do, right? Like, what are their goals? It really comes down to, what is your goal? What sort of lifestyle are you after, right? It's not really about how many deals do you want to do. Well, what do you want to do with the money? Like, why are you even doing real estate, right? Really going meta on that question. Do you want more cash flow at the end of the month? Do you want to quit your job? Do you want to just supplement your job because you like what you're doing? Do you want to have more in retirement? So that's kind of the questions that we like to ask first, especially with the clients that we work with in our training program. We try to get those questions answered, and then from there, back engineer it. Well, what's the fastest way to get you to XYZ? Right? Is it going to be flipping? Is it going to be buying rentals? Again, based on what's the lifestyle you're after? What are you trying to accomplish in your business right now? And what strategy may be out there, whether you're working with yourself or with partners, is going to help you get there and really make it sustainable the whole time.
Great advice. Absolutely love it. Sounds good. So we'll roll over to our new segment here. What are 3 things that most people don't know about you?
Three things most people don't know. Well, I don't know if most people wouldn't know this, but I'm married to my beautiful wife, Jill, and we got the two young kids. I guess what some people wouldn't know is my wife, I actually met her in real estate. So at the time, I was just starting our like training or consulting side of the business, and she was one of the very first few clients that actually hired me to like train her or coach her. And so probably most people wouldn't know that. And again, fast forward, we ended up getting married and we got kids together. So yeah, my wife's actually a previous investor. She was flipping houses before we met, and she runs a company called She Buys Houses. Yeah, I mean, I don't know what else to say. Like I love traveling, and every year now for the last couple of years, we take off for a couple of months down south to Mexico. So we started snowbirding, and which has been great. We just spent a month or so in Mexico, and God willing, we'll do it again, or maybe go somewhere else.
What, you live in Winnipeg? Why would you need to go snowbirding?
Yeah, that's right. Yeah, exactly. So, but yeah, no, we love travel. I'm always itching every seems like every 3 months I want to go somewhere, but we love doing that.
It sounds good. Other than Mexico, is there anywhere else on the agenda you'd want to travel?
Yeah, for sure. We've been thinking, we've had some friends go to like Costa Rica, so that's really on our list. I'd love to go there, and then checking out Bali and Europe. That's another like on that continent. We've never been there, so I'd love to go there one day, and probably wait till the kids are older, so you can enjoy it more.
How old are the kids now?
2 and 5.
Okay, yeah, might be a little bit of chasing around then.
Yeah, that's right.
Sounds fair. Perfect. And one other thing, something that I absolutely love about you is you talk about being able to raise other people's money and being able to leverage it so much. Would you be able to share, I guess, just some of your success stories in doing so?
Sure. Anything in particular you want to know?
No, I know you've done so much with it. I don't even know where to begin. So I just love hearing some of the things that you've done.
Yeah, for sure. So we've been raising money for, I'd probably say, about 7 or 8 years. I started buying real estate with our own cash, our own credit, saving up money, again, the traditional way. And it wasn't until a few years ago or not a few years ago, about like 8 years ago, that I partnered up with a couple of people I knew locally, and they actually had access to capital through their family, and just kind of like, learning through osmosis, learning and being around them, I was able to really develop those skills of raising money. And because I have a background as a financial planner, so I used to sell life insurance, mutual funds, segregated funds, TFSAs. I really understood money and investment and really knew how to speak that language. So I think that, mixed with just being in real estate around the right people, I was able to start talking to people about investing. And at that time, we were primarily doing flips. So we would raise money all cash from a private lender, where we would pay them maybe a 10%, 12% sometimes, plus one or half a point, and then buy all that property cash. So we kept doing it again because we were doing about 7 or 8 projects a year, and so we started doing that. And then eventually, a couple of years back, we decided to change our strategy and get into more long-term holds. And again, we already had a few properties under our belt. So at that time, because we didn't have a job or anything, we needed investors. Like that's how we really wanted to scale. And I mean, there's other ways to scale. You can do vendor financing or VTB and things like that. But that's our model is more the JV route. So again, we raised money, and because I was really good at raising money privately, like on the private side, short-term debt side, I was able to go to these investors and find other ones that had money, that they wanted to get in real estate, but they didn't really have the knack for it. They didn't have a team. They didn't know how to analyze. They didn't know how to manage tenants, hire contractors, nor did they want to. And because I was able to go there and offer these people my expertise, because I already had a bit of a track record, and because I can manage it and really just make it like hands-free for them, they were able to trust me and really partner up with me. So that's kind of how we got our start. And I mean, we've been working with investors for years now. We've purchased close to about buying and selling close to about 140 properties now, and primarily with OPM, like other people's money. And we're probably going to continue to do that because I really do enjoy that.
That's awesome. Very glad to hear it. Very inspirational too. Thank you, sir.
Yeah, you bet.
Perfect. So just before we get out of here, where can people find out more about you?
Yeah, if people want to stay connected with me, they can add me on Instagram. It's just my first name, Manjit underscore Rukhra, Manjit underscore Rukhra. They can find me on Facebook, same first name, last name. They can connect with me like on our YouTube channel. We got a bunch of videos there and a lot of free resources. Or they can even join our public group, our OPM group that I mentioned earlier. So yeah, those are some of the ways that people can connect and reach out to us. And if they want to find out a little bit more about kind of what we do and how we help investors that are, either brand new to real estate, or they've been investing for a while and they're just kind of getting tapped out of funds where they can start buying multiple deals a year, they can go to our website, prosperpath.com, to just find out more about our work.
Awesome, awesome. But what was the name of your YouTube channel again?
It's just my name.
Okay.
Yeah,
Sounds
yeah,
good.
super easy.
Well, Manjit, thank you very much.
You bet. Thank you for having me.